I'm Cynthia Rowland, and this is episode 63 of EO Radio Show. In today's episode, I'm going to discuss the new proposed regulations that provide the definitions relevant to the statutory regime that applies to donor-advised funds. The Internal Revenue Service and Treasury Department issued a notice of proposed rulemaking on Monday, November 13, which were officially published in the Federal Register on Tuesday, November 14, 2023. So this is big news for the charitable sector. These proposed regs provide guidance regarding donor-advised funds and taxable distributions from them. In episode 62, I provided an introduction to the basic rules that apply to sponsoring organizations and donor-advised funds. So with these new regs, there are 5 subparts, and they're issued under Treasury Regulation 53.4966-1 through 53.4966-5. In today's episode, I'm going to focus on the important definitions in the -1 reg and the -3 regs. That's 53.4966-1 and -3. And then in future episodes, I'll go into the details of the other 3 subsections. Welcome to the EO Radio Show, your nonprofit legal resource. Brought to you by the Exempt Organizations Group at Farella, Braun & Martel. My name is Cynthia Rowland, and I'm a partner at Farella. I'm a business and tax lawyer with more than 30 years of experience advising clients on nonprofit and charity law. Through this podcast, our lawyers and guests will discuss a range of legal and business issues impacting the nonprofit world because we understand you work hard every day to make your community a better place to live and do business. Many of our programs focus on the basics, and at times we'll do a deep dive into narrow and complicated legal issues. Again, welcome to the EO Radio Show. We're glad you're here. So today I'd like to start with the proposed regulations under 53.4966-3, which generally define a donor-advised fund. Under that regulation, which closely follows the statute, which is 4966D2A, the proposed regulations define a DAF generally as a fund or account that meets 3 criteria. Number 1, it is separately identified by reference to contributions of a donor or donors. Number 2, that is owned and controlled by a sponsoring organization. And number 3, with respect to which at least one donor or donor advisor has or reasonably expects to have advisory privileges with respect to the distribution or investment of amounts held in that fund or account by reason of the donor's status as a donor. Unless otherwise accepted, a fund or account that meets all 3 prongs of this definition would be a DAF. So of these 3 parts, part 2, relating to a sponsoring organization as the owner or controller of the fund, that is not materially changed from the statute. It follows the same regime as in the Internal Revenue Code. A sponsoring organization is proposed to be defined in accordance with the statute as any organization that meets the following criteria. 1, it's described in Section 170C, other than a governmental unit, without the requirement that it be created or organized in the United States. And 2, that the organization is not a private foundation. And part 3, that it maintains one or more donor-advised funds. So those are the criteria for what qualifies as a sponsoring organization, and no material changes there from the statute. There are big changes in the reg, though, or I should say big glosses and many interpretations and rules on the other definitional part of what constitutes a donor-advised fund in the other 2 areas, which is separate identification by reference to contributions of a donor or donors. And then secondly, there's a lot of additional material describing what is meant by advisory privileges. So starting with the proposed regs that address separate identification by reference to contributions of a donor or donors. So the statute itself states that a DAF must be separately identified by reference to contributions of a donor or donors. In general, the proposed regs provide that a fund or account is separately identified by reference to contributions of a donor or donors if the sponsoring organization maintains a formal record of contributions to the fund or account. A formal record exists regardless of whether the sponsoring organization actually commingles the assets with other assets of the organization, as long as the sponsoring organization actually tracks the contributions of the donor or donors to the fund or account. And a contribution is defined under these proposed regs as any gift, bequest, or similar payment or transfer into the fund, whether in cash or in kind, and it's contributed to or for the use of the sponsoring organization. If the sponsoring organization doesn't maintain a formal record of contributions to a fund or account, then whether the fund or account is considered to be separately identified is determined based on all the facts and circumstances. The proposed regs provide that facts and circumstances that are relevant in determining whether a fund or account is separately identified include the following. So these are important facts to keep note of if you're trying to determine whether a fund or account actually is separately identified. There are 5 different things to keep in mind here for the facts and circumstances. Number 1, the fund or account balance reflects items such as contributions, dividends, interest, distributions, administrative expenses, and gains or losses with respect to the fund or account. Number 2, the fund or account is named for one or more donors, donor advisors, or related persons. Number 3, whether the sponsoring organization refers to the fund or account as a DAF. Number 4, the sponsoring organization has an agreement or understanding with one or more donors or donor advisors that such fund or account is a DAF. Number 5, one or more donors or donor advisors regularly receive a fund or account statement from the sponsoring org. And facts and circumstance number 6, I think I said 5 a minute ago, but there's actually 6 here. Number 6 is the sponsoring organization generally solicits advice from the donors or donor advisors before making distributions from the fund or the account. So the proposed regulations then go on to provide some detailed information on how to define a donor for purposes of these rules. The proposed regs define a donor generally as any person that contributes to a fund or account of a sponsoring organization. It doesn't have to be a natural person. It can be an entity. The proposed regs explicitly exclude from the definition of a donor only 2 categories of organizations. That is, public charities described in 509A 1, 2, or 3 other than disqualified supporting orgs. And the other excluded type of entity is any governmental unit described in Code Section 170C1. And the reason for these 2 exceptions is that public charities and government organizations generally are not the type of entities for which the DAF penalty taxes are intended to apply. A fund or account that's separately identified by reference to contributions solely from either a public charity that's not a disqualified supporting org or a government entity are not treated as separately identified by reference to contributions from a donor, and thus those types of accounts are categorically not donor-advised funds. However, because private foundations and disqualified supporting organizations could use a DAF to circumvent the payout and other requirements that apply to those organizations, the proposed regs do not exclude private foundations or disqualified supporting orgs from the definition of donor. For more explanation about supporting organizations and the types of supporting orgs that are disqualified supporting orgs for these purposes, you might want to go back and listen to episode 61, which describes type 1, 2, and 3 supporting organizations. Generally speaking, the ones that are disqualified for purposes of these rules, in other words, supporting orgs that are non-functionally integrated type 3 organizations and certain type 1 and type 2 organizations that also receive contributions to the donor advised fund, those types of supporting orgs are categorically included as donors for purposes of the DAF rules. That may seem kind of circular, but for those of you who are trying to get into the nitty-gritty, the show notes to this episode have a direct link to the Treasury regulations that go through these rules in extensive detail. Moving on. The proposed regs also provide some extensive information about advisory privileges. And also, by the way, there are 11 examples included in the Treasury regs of funds or accounts that are or are not treated as donor-advised funds. Under Section 4966 of the Code, a fund or account constitutes a DAF if at least one donor or donor advisor has or reasonably expects to have advisory privileges with respect to the distribution or investment of the amounts held in the fund, and such advisory privileges must arise by reason of the donor's status as a donor. The proposed regs generally provide that the existence of these advisory privileges depends on the facts and circumstances, including the conduct and any agreement or understanding of both the donor advisor and the sponsoring organization. A donor or donor advisor may have or reasonably expect to have advisory privileges even in the absence of the actual provision of advice. So in other words, you can be a donor or donor advisor within the meaning of the statute, even if you don't actually provide any advice. So it's really important to be very careful about the defined terms here. So advisory privileges include those arising from service on an advisory committee to the fund. The proposed regs also presume that advisory privileges of a donor or donor advisor arise by reason of the donor's status as a donor, except for specifically provided exceptions in the proposed regs. The proposed regs give some information about facts that are sufficient to establish that a donor or donor advisor actually has the advisory privileges by reason of their status as a donor, regardless of whether they are exercised. And these 4 facts are the following. The sponsoring organization allows a donor or the donor advisor to provide non-binding recommendations regarding distributions from or investment of the assets in the fund. The second fact is a written agreement states that a donor or donor advisor has advisory privileges. The third fact that would establish it is a written document or any marketing material of the sponsoring organization that's been made available to the donor or donor advisor and indicates that the person may provide advice to the sponsoring organization regarding the amounts held in that fund. And the fourth fact that's material here is when the sponsoring organization generally solicits advice from the donor or donor advisor regarding the distribution or investment of the amounts in the fund or the account. Then the proposed regs also have 4 special rules that relate to advisory privileges. First, if at least one donor or donor advisor has or reasonably expects to have advisory privileges of any portion of the account, then the advisory privileges by reason of the donor's status as a donor exist with respect to that fund or account, even if there are multiple donors to the fund. Second, there are special rules for advisory privileges arising from service on an advisory committee. Third, advice that's provided solely in the person's capacity as an officer, director, or employee of the sponsoring org does not by itself give rise to advisory privileges that cause a fund to be a DAF. However, if by reason of the person's contributions to the fund or account, the officer, director, or employee is allowed to advise on how to distribute or invest the amounts, the person would be considered to have advisory privileges by reason of the person's status as a donor with respect to that fund. Lastly, unless the special rule for officers, directors, and employees of a sponsoring org applies, if a donor to the fund or account is the sole person with advisory privileges, the advisory privileges are deemed to be by reason of the donor's status as a donor. This bright line rule provides clarity and enhances administrability, according to the Treasury Department. So moving on to the definition of donor advisor. This is another loaded term. Consistent with the Internal Revenue Code provision, the proposed regulations define donor advisor as a person appointed or designated by a donor to have advisory privileges. If a donor advisor delegates any of their advisory privileges to another person, that person also is a donor advisor. There's no particular form of appointment or designations that's necessary under these proposed regs. A donor advisor generally includes a person suggested or recommended by a donor to have advisory privileges if the sponsoring org actually provides such privileges. However, under the proposed regs, this rule does not apply if the donor recommends an investment advisor who is properly viewed as providing services to the sponsoring org as a whole, rather than providing services to the DAF, or the donor recommends a person to serve on a committee of the sponsoring org that advises as to the distribution or investments in the fund. The proposed regs then go on to include 3 special rules with respect to donor advisors. First, a person who establishes a fund or account and advises as to the distribution or investment of amounts in that fund is treated as a donor advisor with respect to that account, regardless of whether the person contributes to the fund or account. For example, if a person establishes a memorial or fundraising fund to which that person doesn't contribute but does provide advice regarding the distributions, that person is considered a donor advisor. The donors to the fund have implicitly designated the advisor to have advisory privileges. One of the examples in this reg does explain that in more detail. Second, an investment advisor who advises on the investment of the fund or provides investment advice to both the assets maintained in the DAF and the personal assets of a donor to that DAF, so a person who's the personal investment advisor, is treated as a donor advisor with respect to the DAF while serving in that dual capacity, regardless of whether the donor appointed, designated, or recommended that personal investment advisor. Recognizing that a personal investment advisor may more generally advise the sponsoring organization, the proposed regs provide that a personal investment advisor is not considered a donor advisor if the personal investment advisor is properly viewed as providing services to the sponsoring org as a whole, rather than personal services just to this particular DAF. Again, there are in the examples little fact scenarios that explain this provision. So in further fleshing out the definitional terms that apply to when there is a donor advisor, the Treasury Department and the IRS generally regard service on a committee of a sponsoring organization where that committee advises as to distributions from or investment of assets of that fund as a form of advisory privilege with respect to that fund in determining whether the fund is a DAF. So even though the sponsoring organization may control the selection of the committee members consistent with its ownership and control of the fund or account, if there's an advisory committee, we may still fall into the definition of a DAF. And there are many detailed rules in this regard. The proposed regulations recognize that a fund or account, including a multiple donor fund, may sometimes be advised by an advisory committee that includes one or more donors. In recognizing that, the proposed regulations provide two special rules relating to advisory privileges arising from service on an advisory committee. Under these two special rules, a fund could be advised by a committee that may include one or more donors, donor advisors, related persons, or persons recommended by the donor or donor advisor without being a DAF. So the first one, when a sponsoring organization appoints a donor, donor advisor, or related person to an advisory committee, that person generally is treated as having advisory privileges by reason of the donor's status unless it meets the following criteria. One, the appointment of the person is based on objective criteria related to the expertise of the appointed person in the particular field of interest or purpose of the fund. And number two, the committee consists of 3 or more individuals, not more than 1/3 of whom are related persons with respect to any of the others. And number 3, the appointee is not a significant contributor to the fund or account, taking into account contributions by related persons with respect to that appointee. If the appointee or related person is not a significant contributor to the fund at the time of the appointment, but later becomes one, the IRS can still find that the person has advisory privileges based on the facts and circumstances. So that's one exception to the advised by an advisory committee, that if you can meet those 3 criteria, then the donor who serves on that committee does not cause the fund to fall within the definition of a DAF. The second special rule comes into play when a donor recommends someone to serve on an advisory committee. The proposed regs do allow a donor to recommend a person to serve on an advisory committee for a fund, and it's not treated as a DAF if the following 3 criteria are met. And these are going to sound familiar. The recommendation is based on objective criteria related to the expertise of the member. The committee consists of 3 or more individuals who are unrelated, and the recommended person is not a related person with respect to the recommending donor or donor advisor. So what they're looking for here in these exceptions is an advisory committee that's composed of experts, and there's not a significant relationship to the donor in order to cause this to be a donor-advised fund. So the proposed regs also address the circumstances where there's a multiple donor fund, that is, a fund created with a number of different donors who contributed to it. The proposed regs note that even if separately identified, a multiple donor fund is not a DAF if no donor or donor advisor has or reasonably expects to have advisory privileges with respect to the distribution of the assets. The proposed regulations include several special rules that may permit a multiple donor fund or account to be accepted from the definition of the DAF, and I'll go into those in a future episode that focuses on the exceptions to the DAF rules. The proposed regulations also exclude certain types of entities from the definition of donor. The proposed regs define a donor to exclude any public charity described in 509A 1, 2, or 3, and any governmental unit described in Section 170. If a fund or account has multiple donors, but only the public charity or governmental unit has the right to exercise advisory privileges, then, under the terms of the reg, there is no donor that would have advisory privileges, and thus the fund or account is not a DAF. The proposed regs also provide 2 special rules relating to advisory privileges arising from service on an advisory committee. These 2 rules would allow certain multiple donor funds or accounts to be advised by a committee that may include 1 or more donors, donor advisors, related persons, or persons recommended by the donors without being a DAF. So check out the 11 examples under 4966-3 for a lot of good information and good examples of funds that do and do not meet the criteria as a DAF. A significant issue addressed by the proposed regulations is how to treat funds or accounts where there are multiple donors. The Treasury Department and the IRS anticipate that in most circumstances, a multiple donor fund or account is treated as separately identified by reference to contributions of a specific donor or donors. However, the Treasury and IRS recognize that even if separately identified, a multiple donor fund or account can escape being treated as a DAF if no donor or donor advisor has or reasonably expects to have advisory privileges with respect to the fund. The proposed regulations include several special rules that permit a multiple donor fund or account to be accepted from the definition of a DAF. First, the proposed regs exclude certain entities from the definition of a donor, and as we discussed previously, those types of entities that are excluded are public charities other than disqualified supporting orgs and certain governmental units. So if a multiple donor fund or account has only the public charity or governmental unit that has the right to exercise advisory privileges, then for purposes of these rules, no donor is treated as having advisory privileges. So a multiple donor fund, even if it includes donors who are not governmental entities or public charities, so long as it's only the public charities or the governmental entity that advise, the fund is not treated as a DAF. The proposed regs also provide two other special rules relating to advisory privileges arising from service on an advisory committee. These two rules allow certain multiple donor funds or accounts to be advised by a committee that may include one or more donors without being a DAF. So take a look at the examples in that reg, and there's much more clarity in the examples as to all of these defined terms and what is and is not a donor-advised fund. So that's all for this episode. Stay tuned for future episodes diving into deeper analysis of the proposed regs that are not covered here. That is the 4966-2, -4, and -5. I'm Cynthia Rowland, and you've been listening to EO Radio Show, your nonprofit legal resource brought to you by the Exempt Organizations Group at Farella, Braun & Martel. Farella also now has several YouTube playlists that organize the podcast episodes by interest area, so be sure to look there for episodes applicable to your interest areas in the legal world of nonprofits. As always, if you have suggestions for topics that you would like for us to discuss, please email us at eoradioshow@fbm.com. That's eoradioshow@fbm.com. Thank you for joining us. Until next time, make a difference.